Welcome back. Time now for your MoneyWatch report. The government just released a report on economic growth for the third quarter. CBS News business analyst Jill Schlesinger is here to tell us what happened and how economists missed their mark on the recession call. So, Jill, good morning to you. How did the economy do this summer?
It was a sizzling summer for the economy. Gross domestic product, which tallies the value of goods and services that are sold in the U.S., it increased by an annualized pace of 4.9% in the third quarter. That is more than 2 times the 2.1% in the second quarter and also 2.2% in the first quarter. Now, who is the hero over these past 3 months? Consumers. Consumer spending really did propel third quarter growth. And that happened despite high interest rates.
Well, earlier this year, economists were also universal in their belief that we would tip into a recession this year. So how did they get it so wrong?
You know, part of the economist's job is to look back in history to see what happened when similar events occur. So when you look back in the past and you see the Fed has raised interest rates so quickly, it has generally led to a meaningful economic slowdown. And by the way, often a recession. This time, that has not been the case. And it may be due to a quirk of COVID, actually, because we had so much money that came out of stimulus efforts. And that helped consumers and businesses survive and some even thrive during COVID and the aftermath. It also has led to an unusually resilient jobs market, both of which the Fed did not expect. I'm sorry, not the Fed, but economists did not expect. Oh, by the way, I have been saying that a hat tip to meteorologists all across the country who are very happy and say that they are much better at their jobs than economists are at their jobs.
Well, Jill, the Federal Reserve convenes a policy meeting next week. So what are they expected to do?
Inside of this report, we got a little bit more information about inflation. I know that gas prices are up, but if you pull out food and energy, inflation has really gone down pretty dramatically, and it seems that that is also a trend in the third quarter. So that means the central bankers likely will hold off on any action at next week's meeting. Now, the last meeting of the year, that's going to occur in December, and currently the bond markets are predicting just a 20% chance of a quarter-point increase at that meeting. And that might actually mean that perhaps the Fed is actually done.